Hey everybody, Jake here, TrendSpider, to go over the weekend video update into the second week of November. And we're actually going to just simply go over the same exact tickers that we went over last week, just to kind of see how things played out, what went right, what went wrong, how did price react to certain levels. So we'll start with the broad markets, go into Bitcoin, and then into the same individual names as last week. Starting with SPY, you can see here that we have a pretty classic SR flip here on the daily chart. So you can see this downward sloping resistance zone. We broke out of that on the 25th of October. We continued up pretty much right up to the August high VWAP zone. We did break above it a little bit, consolidated. The Fed spoke, and then we pulled back. But you can see here that this previous resistance zone did act as support actually on Thursday, and then we did get a bounce on Friday and kind of a crazy day on Friday. But overall, a rather green day for the market on Friday, even though we did go red at one point intraday. Now, on the weekly chart, you can see here that we did definitely have some trouble with this COVID low VWAP area. It's not exact, but as you can see here, we've really, this area has been a pretty crucial area starting from back in May when it acted as support and then acted as kind of resistance or consolidation zone back in July. We broke out through it. It did act as support once again in September. We broke through it, and now it's acting as kind of that same area that we saw back in June and July, kind of where price is consolidating here. So your COVID low VWAP zone is definitely something that is very relevant still on the chart, for SPY especially. And one thing that I'll mention here on the weekly chart is we have an outside bar. So the top of the range and the bottom of the range for the week really, was larger than the previous week. So, your high and your low were higher and lower than the previous week. And that's what you get with an outside bar here. So definitely something to keep in mind. Red candle, outside bar going into next week. Not generally the most bullish setup, but, the SR flip here on SPY with this previous resistance turning into support would definitely be more on your bull thesis. Now, going into the Qs, we do have this falling wedge here on the Qs, and what's really interesting is we actually have two falling wedges, two completely different start points here. So you can see here on the daily and the weekly chart, we have this falling wedge. On the daily chart, starts back in June for the support zone, and then August for the resistance zone. And then for the weekly side, March of 2021 as your support zone start. And then the top of this falling wedge is in November of 2021. So two completely different starting points, but you can see here that price is definitely, at least on the daily chart, in the middle of this area. So not a lot of edge here. You do have an outside bar on the daily chart here for the Qs. So pretty much opposite of what we saw, or the same thing as what we saw on SPY on the weekly chart, except we had a green candle instead of a red candle for Friday on the Qs. So, is there upside to potentially test the resistance zone above in the mid 270s? We'll have to see, but definitely a decent recovery on really SPY, the Qs, all pretty much most broad market names on Friday with what looked like possibly a rough end to the week, but we did save it. So that's something to consider on the Qs. We're really right in the middle of the falling wedge. Now on the weekly chart, we're actually near the bottom of the falling wedge support zone here. So we did bounce a little bit off that area, but for now, we are holding this area for now. The bottom of this area is in the low 250s. So if we close and break below that next week, that's when things definitely get a little hairy. Now going into IWM, IWM definitely was leading the market a little bit. Now you can see here that at this point, we pretty much just have this ascending wedge here. So notice that we do have quite a bit of room to kind of ping pong back and forth between these two zones before we get to the apex of this setup. But for now, you can see that we are bouncing off this area. If we were to continue to the upside, your resistance zone is in the mid to upper 180s here. So anywhere from around 187 all the way up to around 189.50 or so. So that would be an area to watch above. If we do break down, pretty much a close below the previous low on November 3rd, let's call it around 174, would definitely be more on the bear thesis. Now, On the weekly chart, definitely have a bear thesis set up here where, and this is exactly what we talked about last week, we have this previous area of support pretty much starting from the COVID lows, connecting to the June lows and then extending that area. You can see that it acted again as support back in September. We broke through it. Now, notice this area is acting as resistance. And last week we talked about that in the video, that we're getting pretty close to potentially breaking above this support zone, which would invalidate this SR flip. But for now, we still have the SR flip. We did get rejected right at this zone. So definitely an area that you want to keep in mind to see if we reverse here once again or what exactly happens. But still definitely rejection at that previous support zone, now acting as resistance. Now going into Bitcoin, this is one that actually had a pretty flat week up until Friday, and then we're starting to finally move to the upside. Remember, I do these videos on Friday, so we are looking at Friday's candle here for Bitcoin, and obviously Bitcoin and other crypto trade throughout the weekend. So this candle is probably not going to be the same as what you see if you're watching this later in the weekend. But all in all, your previous resistance zone that we outlined last week is acting as support and continued to act as support this week. Finally, a nice area for price to bounce and hit a new high for Friday. So if we do continue up going into the weekend, the same areas as last week, anywhere from around 22.5 all the way up to around 22.8 is this previous high here. And then the next area above would be right around 25K, which is right in line with the March high VWAP. So if you look here on the right-hand side, this weekly chart, this 20, let's call it around 23.8 all the way up to around 25 to 25,100 above is right in line with this horizontal level as well. So these are definitely the areas you want to watch. We do have continuation from last week's descending triangle breakout. So definitely that 23,800 all the way up to around 25K would be, the upper limit or upper threshold that you want to watch. But the main area would definitely be at first around 22,500 up to around 22,800. Now, going into the individual names, we'll start with Tesla. Tesla definitely wasn't the strongest name in the market today, and you can see here that we do kind of have this bearish flag. We did break down intraday and actually did close below this zone. So, technically I would probably call it a bear flag breakdown. But, if you were to get continuation from, Friday into next week, the first area that I want to see is just a retest of this previous low. Pretty generic, just support and resistance zone right around 198.60. That's just your previous low from October 24th. So that area would definitely need to hold. And if it doesn't, then, I'd look for a retest of these previous lows that we saw in March of 2021. And that goes anywhere from around 180 all the way up to around 185. So as we talked about last week as well, we do still have this SR flip on the weekly chart as well. So if you were to take the bull and the bear case is definitely kind of showing its face here with the bear flag breakdown with a close below that support zone. And then the SR flip still definitely hanging on here with a pretty ugly candle on the weekly chart and a rejection of that previous support zone, which is clearly acting as resistance at this point. Going into our next one, Apple. Apple had a really rough day, and it was kind of weird to see Apple so weak when the market was actually strong this morning on Friday. But you can see here that we do have this symmetrical triangle. We bounced right off this area. In the past, we have had a bounce off this area. So back in mid-October and then late September, we did at least have a couple days of upside after bouncing off this area. But all in all, definitely not a great day for Apple as far as price action goes. We were down pretty bad earlier in the day, but we did have a little bit of a rebound there. On the weekly chart, once again, we have kind of this symmetrical triangle here. So you can see that we had a huge red candle on the weekly chart. And we did bounce to this previous support zone as well on the weekly chart, which has, same as what we saw earlier, two completely different starting points like we saw on the Qs. The weekly chart, the symmetrical triangle starts from September of 2020. The symmetrical triangle here starts from June. So, same setup on the daily and the weekly, but two completely different time frames here. So all in all, we are still holding this zone for now. We'll see if that area holds, and pretty much a break below around 135, a break and close below 135 on the weekly chart would definitely give you a breakdown here on Apple. Next is AMD. AMD is one that we were looking at the bear flag last week, and we continue to look at the bear flag this week. Generally, when you have a flag, you don't really want to have more than about 15-ish candles in a flag. So we're kind of getting to the point where this may, it technically still looks like a flag, but we're just kind of really elongating this flag here at this point. So, and who knows, maybe it's just a little more of a shorter term to medium term channel here versus a bear flag, but the trend is such a defined downtrend here that the flag does still seem to be valid. But until price breaks above, I'm going to call it right around 65, or breaks below right around 58.50, we're still going to be in this flag. So remember, bear flag, it's only called a bear flag because you're looking at the trend. That's your bear part of it. The trend is down, so that's where the bear comes from. The flag is a flag, so that's where the flag comes from. So bear flag does not mean you can't go up or break out. It means that the current setup is a downtrend with a flag, and that's where the bear part comes. The bear part doesn't come from. It's definitely going to go down from this setup. That's just based on the trend is we're in a downtrend with a flag. Now on the weekly chart, you'll see here that we do have this previous 2020 resistance zone that we talked about last week acting as a support zone. We did hit a new high this week, so 3 green weeks in a row. But for now, we're going to kind of be ping-ponging back and forth potentially between this 2020 resistance zone and this previous support zone that we saw pretty much from September of 2020 all the way to July of this year, and then finally broke down through it in September. Same thing here, though. You can see we definitely have more of what looks like a bear flag here, even on the weekly chart. So that is what we need to look at until one of these levels break on the daily chart, and then we can kind of see where price action goes from there. But you do have a gap above, so if we did break to the upside, you do have a gap that fills right around 67.70 or so. And then you also have a gap below from way back. And remember, you do have the gap detector that you can use. So the gap detector you can see here, this is just automated gap detection. You do have another gap that fills right around $50.25 below. So depending on which way price breaks, you have a gap above, you have a gap below, and those would probably be your initial targets depending on the direction of the breakdown or breakout. So definitely check out the gap detector, because a lot of the price moves that we've seen are generally, moving towards, a gap to the upside or a gap to the downside. So having that automatic gap detection is really nice to have in the back pocket. Going on to Netflix, this is one that we talked about last week. We were talking about the gap above, but we also have the gap below, and that's what we started to fill today. This gap from earnings, we're starting to fill it to the downside. So that gap fills right around 250 or so, give or take a couple cents. But the main thing that I wanted to point out here is, last week we were talking about this rising, broadening formation here. So, price is going up, but resistance and support zones are kind of diverging from each other, creating that more of a broadening setup. And we rejected right at this resistance zone that we talked about last week. If we were to continue down, your main area that you want to watch is the gap below right around 250. But if we continue to break down from there, we can move all the way to the low 230s, which is where this weekly support zone is below, assuming that we moved there next week. Now, if we didn't, it would take a little time. We could bottom out in the low 240s. So it really just depends on how long, right? So if you look at the candle, this is next week. So if we moved right down and this was the weekly candle next week, then your support zone is going to be in the low 230s. If it takes a little bit, and let's say that, we move down here, then notice that your lows are getting higher because this diagonal trend line is increasing with time. So the longer that it takes, to move down, the higher that your potential support zone is going to be above. So just remember that these diagonal zones are a function of time. So it's not like a horizontal level where it stays static. If you're looking at diagonal zones, they are going to change with time. Now you can also look at this. Here's your previous high here, and here's your previous high from August, and then your high in September. That's right around 250 or so. So that would be maybe your first level to watch. And that's right in line with this gap. So 250 is literally, the gap fill, but it's also the previous resistance zone, which may act as a support zone. You may get that SR flip there, but we'll just have to see what happens going into the week ahead. Last one we'll look at is Microsoft. And Microsoft really was not looking great on Thursday. And then it wasn't looking great on Friday, but you did have a strong close to the day. But at this point, still just this previous support zone here from the lows in October is acting as potential resistance now on the daily chart. If we did reverse here and continued to move down, your potential support zone is down in the low 200s at this point. So just keep that in mind for Microsoft. And you can see here on the weekly chart, we definitely are respecting this. I wouldn't call it a perfect channel. It's not perfectly parallel, but it's pretty damn close. So we're going to call it a channel, just a downward sloping channel here, descending channel. And you can see here that this zone once again is acting as a pretty strong level of support, at least as a function of the close. We did break down through this area this week and moved pretty far down through that area with a low of around 214. But for now, it is holding on the weekly chart. If we close below this on the weekly chart, that's when this channel will be invalidated, and we'll just see if that actually plays out in the weeks to come. Hopefully this video was helpful. Everybody, thank you so much for watching. Remember, if you do enjoy these videos, please like and subscribe. If you do want to try out TrendSpider, which is the platform I'm using for this analysis, we do have a 7-day free trial. So definitely give it a shot if you'd like. We appreciate your business and your curiosity giving it a shot, and we'll see you next time.